Hey guys, have you ever jumped into a stock that is hot on social media thinking that you are fighting systematic corruption or naked shorts only to watch your account balance or your investment get obliterated? Then you spend the next year or two pointing fingers at CEOs, the SEC, FINRA, or even your fellow retail traders on social media. Sound familiar? Hey, I've been there too from time to time. Today, though, we're going to talk about the real investment objectives, the ones that keep your money safe and growing, not vanishing in a Reddit-fueled frenzy. Let's get you thinking like a smart investor, not a gambler. Stick around because this talk could save your portfolio. For many new and inexperienced investors, investing is sometimes just plopping money down and then praying to the gods, both old and new, that something goes your way. I'd like to present you a different way to think about things. First of all, identifying what is your objective with your investments, and even a more difficult talk to have with yourself, what is your risk tolerance? And then we can take a look and see if your investment objectives are aligned with your risk tolerance. So what is an investment objective? By definition, it is the primary financial goal that you are aiming for with your money. Think of it as your GPS for investing. It guides your decisions and keeps you from getting lost in the market's noise. For some of you, fighting market corruption might be an objective. For others of you, growing your portfolio balance, generating income, or saving for retirement might be an objective. And for some of you, speculating on high risk investments might be an objective. There's no wrong answers. It is about knowing yourself, knowing your objectives, and knowing what type of risk you can stomach. We all know, or at least I hope that we all know, that nobody on social media is your financial advisor. You have not hired anybody on social media to give you investing decisions. There are a lot of opinions out there, but if you were to go hire a professional financial advisor, they're going to talk to you about the 8 basic investor objectives. And we're going to walk through them on this video. And by the end, you'll see that why chasing market change as an objective might not match your risk tolerance, and how to pick a goal that does match your risk tolerance. You might notice that fixing Wall Street or fighting naked short selling isn't on the list of investor objectives. That is because those are emotional crusades, not financial goals. Let's break down each objective so you can find one that fits you and avoid losing everything while blaming the system. First up, preservation of capital. This is about keeping your money safe and avoiding as much risk as possible. Think CDs, money market funds, or short-term treasury bills, super safe government-backed stuff. These investments offer low returns, no fancy payouts, but almost no risk of losing your cash. If you are the type of person who gets stressed about losing a single dollar, hey, this is your lane. Next up, safety of principal. This is for people who want steady income over time, still without much risk. Think treasury notes or bonds, which protect against inflation. They offer low yield, small coupon payments, but rock solid safety. Perfect for retirees or anyone with low risk tolerance who wants to establish predictable income over a longer period, say 5 to 20 years. Now let's talk tax advantaged income. This is about earning income that's taxed less or not at all, like from municipal bonds or preferred stock. It's great for high income folks in big tax brackets or retirees looking to keep more of their money. It has moderate yields, low to moderate risk, a solid choice if you want income without wild swings. Moving up to a moderate income objective steps things up a bit. You're okay here with some risk to earn steady income from things like investment grade corporate bonds or dividend paying stocks. Think companies like Walmart or Coca-Cola. This suits retirees or pre-retirees who want income but can handle moderate risk. Move into growth. Moderate growth is about building wealth without crazy risk. Think large cap stocks like Apple or mid cap stocks in stable industries like utilities. You might get some dividends, but the focus is really on capital appreciation over 5 to 20 years. This objective is perfect for young professionals or middle-aged investors with a moderate risk tolerance. Moving up the risk ladder, we've got high yield income, where you chase bigger payouts but take on a little more serious risk. Think junk bonds or preferred stock from shaky companies, which often has higher yields. This is an objective really for experienced investors or retirees with other income sources who can stomach the risk. High yields, high risk can be exciting, but it's not for everybody. This objective is ideal for folks who are seeking cash flow. Our last two objectives get into the high return, high risk category. First, we start off with what is called aggressive growth. This is for investors who want big returns and can handle big boy risks. Think small cap startups, tech sector funds, or emerging market stocks like those in India or Brazil. High potential returns, but you could lose a lot too. This objective is ideal for younger investors with a longer time frame, think 10 to 30 years, so that they have time to recover from any short-term losses, and they also have a high risk tolerance. They're okay knowing that they could lose substantially all their money in any short-term period. Our final category, one that many of you dabble in from time to time, me too, is speculation. This is really the wild west of investing. Options, penny stocks, pre-revenue companies, or even companies with no revenue hoping for a turnaround. Massive potential returns in this category, but you must go into these investments being okay with the fact that you could lose everything, depending on what happens with the company, the market, and your timing. This objective is for investors with very high risk tolerance who can afford to lose what they put in. This tends to be a category that a lot of retail traders find themselves in, but here's the kicker. Most retail traders lose money here because they don't take the time to understand and digest the risk that they're taking on. So let's be real, let's call it what it is. If your goal is fixing systematic corruption or stopping naked short selling, you're probably investing in companies in that speculative objective, and that is perfectly fine with me. I'm not here to tell you how to invest your money. That is up to you, but you must be okay with the fact that you could lose it all on any given day. You are speculating, and that's fine if you know the risks. But if you are one of those people after the fact that is going to be upset for whatever reason that you lost your money, again, for whatever reason, you are in a category that has high risk, the most extreme risk. And if it is going to be upsetting to you in any way that you lost your money, then take a look at this table and maybe find an objective that is more suitable to your risk tolerance. Maybe one that is in the low or moderate category, maybe one that is in the high risk category would be more suitable, even a high yield income or aggressive growth objective. The real gut check here is this: assess your risk tolerance. Can you handle losing 50 to 100% of your money? If not, stay away from the speculative stocks. Define your objective and then diversify. You don't want all of your eggs in one basket. Finally, avoid emotional trading. Fighting Wall Street corruption feels good, and I support it 100%, but it is not a financial plan. When you align your investments with your real objective and your risk tolerance, you enable yourself to stop blaming others and start building wealth. It is up to you. It is your time to take control of your decisions and your portfolio. Drop me a comment with your investment objective and how much risk you're comfortable with. I'll reply with some tips if I can. Hit that like button, subscribe, and turn on notifications for more videos to help you trade smarter. Let's stop this blame game and start building wealth. I'm Tony Denaro. Thank you for watching, and I will see you on the next video.